Thank you for tuning in to Mastering the Math of Business with Lauren Young. Today we're going to be talking about investment risk. Every investment has some risk factor to it. Doesn't matter what the size of the business is, how many years the business has been in existence, the amount of the investment, all of those factors have no meaning other than the amount of risk is different. But each has risk. And so with that, today we're going to be talking about a way to assess the risk of an investment. Now, before I turn to this next visual, don't run away. This next visual shows the actual formula, and yes, it's a little intimidating when you look at it, but the point is it's got a couple of different factors in it. Couple of different things you need to know to be able to calculate what the investment risk is. And I like to refer to this as the double your money math. In other words, what's it going to take to double your money on your investment? And the way to appreciate this is that the money you spend, i.e. the money you invest in your business, is a function of the size of the investment and the targeted profit returns that investment's expected to produce. In other words, an investment that requires significantly high sales is a more risky investment. An investment that has lower profit returns is a riskier investment. And that's what this double your money math helps you to gauge. The visual that I have associated here with the narrative is really the fact that you can do one of two things. You can either do this math and make a more informed decision on what it's going to look like for you to double your money, or you can roll the dice. The problem is too many small business owners don't appreciate how easy it is to gauge the risk of an investment, so they roll the dice, operating more by the hope method, hoping that the planned sales and profits will materialize because they've made this investment. In fact, in the different businesses I've worked with over the years, this is usually one of the root causes for how a good business became a difficult business. It's because an investment was made, consumed a lot of cash, and it isn't generating the returns it was expected to generate, putting the business in a compromised situation, particularly as it relates to cash flow from operations. So here's the elements that you need to know to be able to do this math. The first thing you need to know is what's the size of the investment. In this scenario, we've got a business that's looking to invest $100,000. They'd like to return that investment in 4 years. So that means that they're going to have to generate $500,000 in sales with a 20% profit return for that to happen. So let's look at this in its pieces and parts. First thing you need to do is you need to know the dollar value of the investment, and you need to have a projected time frame for returning that investment. The second thing you need to know is you need to have an approximation buffer. Because if you're 100% certain in all of the variables that are going to play out here, then you can put 100%. Which will actually lower the numbers that you have to hit to be able to double your money against that $100,000. But one of the reasons why investments are always risky is because there's uncertainty in it. So you put an approximation buffer into this formula, and it allows you to do this math. So the first piece of math you do is you calculate what is your profit return. Your profit return is a function of dividing 1 by the number of years you want to return that, and then you multiply it against this approximation factor. So it looks like this. You have to take 1 divided by 4 times 80%. That's going to give you this 20% return. Next, you then divide the investment amount by this return rate. That gives you your $500,000. You double check your math, and that's this $500,000 times 20%. That's 100,000. So that's what it's going to take you to earn back this investment. It's going to take you a 20% return against $500,000 in sales. That's how simple this double your money math is. It's really it's a way to just appreciate how much risk. And the risk you're looking at is, how hard is it going to be to generate this $500,000 in sales? And can I get a 20% return? That's it. That's the math. So yes, the formula on its surface looks very complicated, but in reality, it's a pretty simple formula. It just involves two different types of math. And so with that, and when I say types of math, I mean math formulas. So with that, the call to action associated with this Mastering the Math video comes down to, really, it's about knowing 5 key things in your business. If you can start knowing today 5 key things in your business, you can start making more money tomorrow. And the better you understand the relationships of these 5 elements that make up the business CPR management system, the more likely you are to earn the targeted returns on the investments you make in your business. Because that's the goal. The goal is to make more money on what you're investing in your business than what it's costing you. That's the goal of every business. As with all videos, I welcome comments and suggestions, particularly in this area of learning the math so that you're not rolling the dice so much. If there's a topic you'd like to see covered, put that in the comments section, and then I'll cover it for you. I'll show you how to do the math with that. Also, don't underestimate the power of likes. Likes are really significant in these types of videos, and I welcome all likes. Lastly, subscribe. Subscriptions enable you to get more of these types of videos, all geared towards reducing the stress levels of being a business owner or being a key manager in a business. When you understand the math, you can appreciate whether or not a particular topic is of significance to you. In this case, it's about not putting money at risk unwisely by appreciating what it's going to take in sales and returns on those sales to be able to repay the cost of that investment. That's the purpose of this video. I look forward to joining you on the next edition of Mastering the Math of Business with Lauren Young. Thanks for tuning in. Goodbye.